Welcome to Cash Chats with me, Andy Webb from BeCleverWithYourCash.com. This is the podcast to help you make the most of your money. In episode 374, I'll be taking you through the changes to national insurance, which is more exciting than it sounds because this is about how much tax we pay every month. It is going down. You can get more in your pay packet from April onwards. But there is a catch, and actually in real terms, we might be worse off. I'll take you through what it might mean for you based on some example salaries. I'm going to be comparing as well the two big cashback sites, Quidco and TopCashback, to help you decide which one you should be using to make a little bit more money. Plus, ISA season is back. It's just finished for the last financial year, but with the new financial year, it's back in earnest. And I want to sort of help you decide whether you actually need one. Don't get caught up in the hype. Do you actually need one? And if so, what's the best way of using it? All of that plus deals of the week, so make sure you stay around for all of that. Let's get into it. This is episode 374 of Cash Chats. So amongst all the price hikes that have happened in the start of April and with the new financial year, there is going to be a way that you're getting more money back in your pocket every month for the next year, at least, if not after that. At least that's the theory. And this is the second cut we've had this year to national insurance payments. Now, if you are working, if you're earning a salary, then you are going to be paying national insurance alongside income tax every single month. And it comes out of your paycheck. So before you even see it, that money is gone. And this is important because this is the kind of thing that goes towards stuff like your state pension, but also other kind of funding, other elements of government spending. But broadly speaking, you're thinking about things like, state pension, NHS benefits, things like that. And in fact, not only is that money going towards some of these pots, some of which you should get later on, they're also helping you qualify for these things. So state pension in particular, although it will vary from individual to individual, broadly speaking, you need 35 years where you have been paying or at least qualifying for national insurance credits in order to be able to get the full state pension when you come to retire. So really important thing that we do this and we pay this. Again, if you aren't earning, you can get these credits. So particularly might come from child benefit or other areas, universal credit, where you will get effectively qualifying years towards a state pension. But we're focusing here on the people who are paying it. This cut was coming into play. Now, the first one was applied back in January, right? So if you're earning any earnings between £12,570 and £50,270 every year, doesn't matter how much you're earning within there, any of that, every pound you earn, the rate of NI dropped from 12% to 10%. So that gave us that little bit of a cut over the first quarter of the year. The new one has cut that down again. So now the rate of national insurance you'll pay on your earnings, within that bracket will be 8%. Now, the government say combined these two cuts mean over a year, the average person is going to be better off by £900, right? Well, let's have a look. This table has been put together by Amelia in the team using data from AJ Bell. And as you can see that if your salary every year is £15,000, so only a small amount of your earnings are above that, where this form of NI kicks in, over a year you'll be better off, pay less tax of around £97.20. And obviously, the more you earn, the higher that's going to be. So if you earn 25 grand in a year, you're looking at nearly £500 less tax you'll pay over the next year. 35 grand, almost £900. That's where that average probably comes into play. £50,000, just under £1,500 less tax being paid in a year. So that's a lot of money back every year, every month, more than £100 back in your pocket every single month. And then as soon as you go above that level of 50,270, it doesn't really matter what you earn because that entire chunk, you'll be paying that slightly less tax, that 2% tax less now, 4% since the start of the year of national insurance on that entire chunk. So whether you're earning, £50,270 or £100,000, you're going to be better off by £1,508. So that's good, right? That all looks like a really good thing for us, less tax. And you will physically be seeing that in your pay pack from this month when you get paid this month, okay? That's assuming everyone's had a chance or the employer's chance to implement this because it was only announced just last month. So there might be a bit where April's pay packet is not quite so different, but you get accounted for again the next month they make up for it. Sounds good, right? But what I want to quickly share with you was how this isn't necessarily, you are better off compared to if this rule hadn't come into play, But there is this kind of underlying thing called fiscal drag. And I've spoken about it before with you guys, but I want to quickly go over it again just so you get a real sense of what it means. The income tax threshold, so that's the other type of tax we pay on our salaries. These have been frozen for a good few years now. They're going to be frozen to at least 2028, at least under the current government plans. Whereas normally they would increase, probably by inflation, but they'd increase a little bit. But they're staying where they are. So 12,570, 50,270, and then roughly 125k for additional rate taxpayers. They are staying where they are. But for a lot of people, our salaries are going up. They're increasing. And that means we're earning more. And year after year, we earn more and more. And what it means is fiscal drag is where people are pulled into a higher rate of tax. They're moving from a low taxpayer, so they're 12,570. Below that, you don't pay. None of us pay any tax below that. So if you're on the state pension, for example, or whatever it might be, a low earner, you might actually start earning more, particularly as state pension has increased by inflation, or more than inflation under the triple lock. That will increase, pushing you in. So suddenly, you become a basic rate taxpayer rather than a non-taxpayer. Or you might be getting pay rises. You might be earning around 45k a few years ago. Well, by now, you could well be pushed into that higher rate tax bracket, which has other connotations, not just that you pay more tax on the earnings above that, but also, your personal savings allowance reduces, as do your other kind of tax-free allowances. So this is a very real thing, which is pushing more and more people into higher tax brackets. So we've had a tax cut with a national insurance cut, but we've also effectively had a tax increase by the freezing of those personal allowances. And again, these similar sort of figures that Amelia sourced from AJ Bell show you how much extra tax you're actually paying annually when you combine these two: the cuts to national insurance and the freezing of the general income tax brackets, rather than them increasing in line with inflation. Now, if you are a low earner, if you are earning £15,000 a year, you'll actually be paying more tax overall. £388 roughly. That's how much extra you'll be paying because of these policies. And if you are earning 25k, so again, relatively low earner as well, not so much, only £34 a year more that you'll be paying, but still, you are paying more. So in very real terms, low earners are not going to be really benefiting from this national insurance cut. Yes, you'll have more, as I say, in your pay packet every month. Small amount, but you've got some. But ultimately, compared to everything else that's going on combined, you are worse off. The people who are going to be better off are those middle earners. If you are earning 35k, 50k, roughly kind of either side and in between those ones, so someone on our salary of 35k, they're actually going to be saving £366 a year. So they are going to be better off over a year. And people around 50k, they're going to be better off by nearly £1,000 when you combine the two. But then when you jump into those much higher earners, then suddenly they are going to be paying effectively more tax because they are moving into that 40% or tax bracket that adds up to around £1,146 a year more in tax. So I just wanted to quickly share that with you, just so you kind of understand that yes, more in your pocket, but ultimately you are paying more tax overall. For most people, as a good example there, the poorest are going to be worse off. The rich people are going to be paying more tax every year, but they've still got some nice allowances and things to take advantage of there. But that's it. So it's just so you know, when your money comes, pay check comes through and it looks like there's more money, this is the real kind of underlying truth behind it. Very quickly though, an update on national insurance contributions for your self-employed, because there are changes happening here. In fact, these didn't start in January. All those cuts are coming in from this month. Now, a couple of big things here. First of all, Class 2 national insurance contributions are being scrapped completely. And these are the ones where, as long as you earned around £6,700-ish a year, up to £12,570, you wouldn't actually have to make these payments at all, but you would qualify for those national insurance credits, which I mentioned before, which are really important in terms of your entitlement to state pension. Now, don't worry, they are going to happen automatically as long as there's still going to exist these credits, even though Class 2s have disappeared, as long as you are earning between those two levels. If you are earning less than that 6,725, then you can manually buy and top up national insurance contributions if you wish. Okay, and again, really important to look at your record there and see what you're likely to be getting. Now, if you are earning more than 12,570 a year, up to 50,270. It's the same thresholds we were talking about before for PAYE. The rate of class 4 national insurance contributions that you'll be making yourself drops from 9% to 6%. This is on your profits within that range. So you again be having to pay less national insurance within those levels there. Above that, and it's the case for whichever way you earn it, the 2% rate is staying the same on earnings above 50,270. So over the last decade, at least, I have been using cashback sites to make a little bit of money back every time I shop. And that could be anything from a hotel booking through to new trainers, through to a new broadband contract. Maybe just a couple of percent here or there, maybe a couple of £100, depending on what it is that I've been buying. And like I say, over the last 10 years, thousands and thousands and thousands of pounds I've made from this. Now, there are newer ways to earn cash back on your spending, which we have covered a few times recently, such as the likes of Hyperjar and Jam Donut and Cheddar, which will give you cash back when you buy gift cards, which are a great way for you to then use it for your normal everyday spending. I'd be cautious of using those for things you might return, but particularly supermarket shopping. It feels like a no-brainer to get 3, 4, 5% back every time you're at the checkout. So they're great ways of doing it. Obviously, there are cashback cards, which we've covered quite a lot on our different channels. But what I want to focus on are really the original ones. The ones where I've made, say the most of my everyday spending, where I've been able to make that extra cash, thousands of pounds. And although there are a number of these different cashback sites, the two leaders, the two best ones out there, the ones I think you can trust are Quidco and TopCashback. Now, we've recently put some content live on becleveryourcash.com looking at each individual one of those and some different hacks you can do to maybe boost your returns on either of those sites. But what I want to talk you through really is which one should you be using? Look at the pros and cons. And Nikki and the team has done a little bit of an analysis on this and kind of given us some ideas to give you a sense of which one might be better for you, at least in theory. But we'll go through this in a minute. Before we do that though, for those of you who don't know what I'm talking about, a kind of quick how cashback works, particularly these two sites. So what you do is you would join as a member. Now, when you join for the first time, you have to be very careful of this. Both TopCashback and Quidco automatically put you down as a premium or a plus member, which comes with a fee, but you can absolutely cancel that down for free if you wish. Again, read the content we've got on the site, which takes you through the pros and cons of whether you want to stick with those kind of boosted memberships, because you can get higher rates, but you've got to work out whether it's worth paying for. But you sign up. Absolutely also would encourage you to go via a welcome bonus. Now, you might have mates saying, here's a refer a friend link. They're great. They make money for them. They won't make as much money for you. So if you personally want to get the most money when you join these sites, do head over to the special offers pages in our deal section of becleveryourcash.com. Prices, these rates do come and go, but we've often got the best, if not almost the best rates out there. Most of the time, it's very, very hard to beat these exclusive offers that we've got at becleveryourcash.com. Anything from 15 quid to 30 quid the first time you sign up and make your first purchase. So yeah, you've signed up to one or ideally both of these sites. And what you do is then you just browse. And they have got 4,000-5,000 different retailers, anyone from sort of ASOS, M&S, Virgin Broadband, some bank accounts are in there, TSB, First Direct, loads of different options in there. Not everyone, but a lot of different options in there. And what you do, when you found the place you want to shop at, you would click from them into the open up the browser it would at that particular retailer or bank or whoever it might be. When you do that, if you make a purchase, the retailer pays a commission back to the cashback site. The cashback site, rather than keeping that, then passes it all back to you. Now, different cashback sites do work differently. Both Quidco and TopCashback basically say they give you all of the money back. All that commission comes to you. You make it all. They make money in different ways. But broadly speaking, you are getting paid a little bit of a kickback for making that purchase, and that is yours to keep. So in lots of ways, it feels like this is amazing, right? You should be doing this every time. And I think you should be looking at it every single time. There are some caveats you need to be aware of. Sometimes it doesn't track. And when I say track, it means that your click from the cashback site to the merchant, the retailer website, for some reason, the cookies don't kind of follow through. They don't realize you made a purchase. And although you can appeal this, it often might mean if that hasn't happened for whatever reason, you don't get the cashback. Remember, it is not guaranteed. Now, most of the time you get it, but there is a chance of that. So you've got to be really careful, and I would make sure that you're not buying something because of the cashback rate, okay? Because it might be that you don't get that back and then you've paid over the odds for something. So that's something to bear in mind there. In fact, often if you can get a 20% voucher code and a 20% cashback, I'd go with the voucher code. And in fact, if you've got a 20% voucher code and a 25% cashback, I might still be tempted to go with the voucher code because the voucher code takes it off at that till. At that moment, you're guaranteed to be paying that. Or you might be lucky and you can stack them, although that doesn't always work. So they're the kind of big things to know when you're using these cashback sites. But broadly speaking, I say big fan of using them. But which one should you go for? So I said, Nikki has taken a look at a number of different retailers right now to give you a sense of the different rates that are available. So here's what we got from just a few days ago. So you can Adidas 4.5% at Quidco, but 7.65% at TopCashback. Asda 75p from Quidco, 85p at TopCashback. Similar kind of thing then happens for most of the other sort of like 15, 20 retailers that she looked at. For the majority of them, there was a higher rate at TopCashback than there was at Quidco. But there were examples. So eBay, for example, was 3% on Quidco, but 1% on TopCashback. Ocado, 4.5% on Quidco, 4.25% on TopCashback. But looking at this list, that would kind of indicate that, yeah, you need to shop between them depending on your retailer, but TopCashback will have the edge because you're thinking if you don't want to use one rather than two, well then TopCashback looks like the winner. But this is just a snapshot. And this what you've got to remember is these rates do change frequently. Sometimes from day to day, you can get different rates on different sites. So yes, it does appear that TopCashback, broadly speaking, might have higher rates, but there's never a guarantee. So I would always look between two of them and see what you can get. There are kind of little browser plugins you can get for Chrome for both the cashback sites, which will tell you what rate you're getting. So you don't actually have to physically go into every site, both sites each time you want to make a purchase. And in fact, they're quite good because they can remind you that there is a potential for earning cashback you might have forgotten about. Can get a bit annoying. Every page, these two pop-ups bouncing up, but it's certainly worth looking at that. But I would definitely use the opportunity to kind of have a look at what different sites the different sites are offering, because again, it can change massively. But from when we had a look, it does seem the TopCashback does seem to pay that a little bit more every time. But it's not just about how much you can earn each time you make a purchase. It's also about the payout when you do it. Now, if you have earned a certain amount of cashback and you pay this out just as cash to your account or to PayPal, then obviously the higher amount you earn in the first place is going to be better. But this isn't the only way you can cash out from a cashback site with these two in particular. You can also withdraw as a gift card. And if you withdraw as a gift card, you get a bit of a kick, a bit of a bonus on top. So again, Nikki had a look and compared some of those kind of key payouts. Again, these do change, rates do move around. But when it came here, on the majority of those different providers that she looked at, the payout was better from Quidco. So for example, you'd get 3% at John Lewis rather than 2%. You would get 4% from Just Eat rather than 3.5%. Again, there were some which were the same at both of them, and some were maybe slightly better at TopCashback. But broadly speaking, if you are happy to do that and you're going to use those gift cards, then you might actually be able to even out the two. You might earn a little bit less potentially with Quidco, but then pay out, it might increase it to a similar or even higher amount. So again, this is about looking at the different options available to you, deciding those retailers you want. And if you know you can get more from a particular retailer, then it might be a better one to go for. Again, looking at both of them because this will change massively all the time, but it's certainly something to be thinking about when you're making that choice. But then there's also a third element, and both of them will offer effectively a top cashback rate guarantee. And in theory, if the other site is offering a higher rate of cashback, you can then say, well, look, I'm going to shop via you, but I want you to match the cashback rate from the other cashback site. Now, I've never bothered trying this myself, but Nikki says she's done it and she managed to get a little bit back that way. And obviously, if that was going to be someone like Quidco doing that, then you would get that little bit matching, maybe potentially a higher rate of top cashback, but then you potential to earn more on the payout, then that could stack well on top. But again, it's worth sort of having a think about it. And these other ways to boost it, of course, are those memberships. You might get even higher rates then, and that might be harder for them to match because they aren't the underlying cashback rates. But there's one more thing you want to look into when you are comparing the two as well, and this is the potential for extra offers, extra bonus top-ups. Now, If you want just a generic one, I think often these are pretty good. So you're just something you want to buy anyway. You can use them at any of the retailers listed on the site. TopCashback are often the best. They're relatively small. It's the like of £2 when you spend £5, maybe £3 or £4 if you spend £10. They're relatively erratic when they're going to happen. There's no way of knowing. I'll generally share them on our Instagram stories when I spot one because they're generally for the day. They come and go. But that is a great way to get a little bit extra and spend it anywhere. And that is via TopCashback. Quidco, on the other hand, tend to have more kind of larger value offers, again, for a day, but they're more tied into a specific retailer or a specific type of retailer. So perhaps you're going to get, £10 bonus when you book a hotel via Expedia, things like that. So you potentially could earn a lot more from those kind of boosted rates. Again, assuming this is something you need to buy at that time because they're normally only around for a day, if not two. And both sites will also have, from time to time, increased rates of cashback, special flash rates on the rates itself. So again, that could make a big difference. So that one day, they're suddenly offering a really, really big amount of cashback, which makes it better for one day than the other. What I'm basically saying is, I've said it a few times already, there is no better one between the two. I think it's important you sign up for both and you keep an eye on both if you really want to get the best possible rate, because they will change on a daily basis. Extra offers will happen on a regular occurrence as well, which might be able to earn you even more. However, if you really, 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 really only want to use one, then I think it comes down to personal preference. The one that you find the easiest to use, the one you get the most, you find easiest to get around with and things like that. So there you go. That's TopCashback versus Quidco. More information and those special offers over at becleverwithyourcash.com. Now we'll head over to Deals of the Week in a second, including an update to Chase's savings rate. But before we do that, for those of you watching on podcast, you might be thinking, hang on, where's that section where you talk about whether you need an ISA in 2024, 2025? Well, we've actually broken it out on YouTube and uploaded it separately. So click this link up here to go and watch that one now. Or if you want to catch it after our Deals of the Week, just simply head to the homepage of our YouTube channel and you'll find it there as well. So here are the Deals of the Week for episode 374 of Cash Chats. And the first thing to share with you is a boost to the savings rate for some Chase Bank customers. Now, you might already have seen this in your app. You might have had an email from it, or you might be thinking, I've had nothing at all. And this is because not everyone's going to be able to get this boost to the interest rate. You have to have been a member or a customer of Chase from before the 29th of February 2024. So if you've joined in the last 4 or 5 weeks, sadly, you won't be eligible at all for this. Plus, you need to have a balance of less than £500 in the savings account, not the main account, in the savings account section as of the 8th of March 2024. If you've had more money in your Chase account, then sadly, you're not going to get this boost, which is a bit frustrating because if you are a regular customer, a loyal customer, using Chase, even though there are better rates available elsewhere, well, you're being penalized. And people who have been hunting out different rates elsewhere, or for whatever reason haven't moved their money over, they may well be able to benefit. So what can you get if you benefit? Well, it's not amazing, but it's still good. It's an extra 1% bonus for 6 months. This will run until November the 4th. So yeah, roughly 6 months where you get this boost. And this will apply on top of the current rate. The current rate is 4.1%, which means you'll get 5.1%. But remember, that underlying rate, that 4.1%, is variable. And not only that, but from the middle of May, it's going to turn it into a tracker rate, which will be 1.15% below the Bank of England base rate. We are expecting the base rate to be cut once, twice, maybe 3 times before November. So that will mean actually you won't get 5.1%. It was unlikely you'll get 5.1% for the whole time. You'll get whatever the 4.1% rate cuts to plus 1%. Doesn't mean it'll be a bad thing because I expect a lot of the variable rate easy access accounts will also drop when we get base rate cuts. So this could end up being a really potentially sort of a big one for you guys. But yeah, only some of you are going to be able to get it. We've got a full analysis of it over on becleveryourcash.com if you want to read more. In terms of the other deals to share with you, a good one, an oldie but a goodie, and I'll share this one again because not everyone knows about it, is around Spotify. If you do use Spotify Premium all the time, you know you're not going to cancel it, you're going to keep using it, then rather than paying month after month after month at $10.99 a month, you can buy a gift card. And you can buy that for yourself. You don't have to give it to someone. Just because it's called a gift card, you can give it to yourself. And this one will cost you £99 for a year, which basically means you're getting a 25% discount. You're getting 12 months for the price of 9. And also, I'm not saying there is going to be a price increase this year, but if there was, you'd also be protected from that increase, at least for the duration of that first 12 months. In fact, you can even stack these after a certain period. I think it's 6 months, you can add another one on top. Now, you won't be able to then use that credit you've applied if you wanted to move on to Spotify Duo or Spotify Family. Sadly, that won't work. It's just for premium. And also, I'm pretty sure you don't get, they might have changed this, but you don't get the audiobook feature as well if you pay by gift card. But certainly it's a big, big saving that's worth looking at. Now, if you've got something you want to buy on eBay, new or old, you can get a £10 voucher, grocery voucher, if you go via vouchercodes.co.uk. You have to look for the offer, you need to activate it, and then click through. You need to spend 40 quid. And when you do that, now that's can also be combined with any discount codes, which eBay might be offering, but the total you pay has to be 40 quid after those discounts. And then you'll be able to claim that £10 back. So if there's something you want to buy, that's a nice, effectively 25% back that you're going to be able to get. Talking about cashback, Uber has extended that 10% credit cashback on train bookings now until the end of August. You may well extend it again after that, but it's certainly one to be keeping an eye on. And we did recently cover in a bit more detail all the different top apps for making railway bookings. And Uber is one of the best ones right now for that kind of quite high value cashback. And you can stack it if you want with cashback on gift cards for Uber as well. So potentially get even more savings there. A decent offer if you've got an Iceland supermarket near you and room in your freezer. 10 items for £10. Things like pizzas, chicken nuggets, stuff like that. But it is a good discount on all of those. It's well worth checking that out. And finally, it is your last chance to get a boosted welcome bonus if you're eligible for the American Express Platinum Cashback Everyday credit card. This is kind of like the entry-level cashback card that they offer. It's free. There's no annual fee. The normal offer is 5% cash back on the first £2,000 you spend in the first 3 months. Until Thursday, the 11th of April, that is increased 5% cash back on the first £2,500 you spend over 5 months. So you can earn more money and you've got longer for that spending. And that's quite good if the other welcome offers have been beyond your means, because you often, spend £3,000 in 3 months is not something everyone can do. This is not a bad option for you. Or maybe you've got a big purchase coming up and after that you don't think you're going to be doing too much spending in order to trigger the bonuses. So it's worth having a look at that. The one caveat with this one is that you have to spend £3,000 on the card in the full 12 months in order to get any cash back, including that bonus. So don't just stop when you've triggered, you spent £2,500 at 5%. Make sure you spend at least another £500 and you will still get cash back on that one as well. But I would say if you are someone who is able to spend more money and can wait a little bit longer, I probably would be looking at a different Amex card for greater ongoing cash back and probably bigger welcome bonuses as well. Well, that is it for this week's episode. Thank you so much for tuning in. Don't forget more information about everything we've spoken about over at becleverwithyourcash.com. And a little nudge as well. We have now got a weekly second episode every Thursday on YouTube, Thursday evening, every Friday morning on all your podcasting apps, Apple Podcasts, Spotify, whatever it might be, of Your Money This Week, where myself and our new addition to the team, Amelia Murray, our deputy editor, will be taking you through the top money stories for the last 7 days. So if you aren't already a regular subscriber, please do click that button and make sure you check however it is you consume the podcast every week so you get that one, as well as this regular Tuesday episode. My name is Andy Webb. This is Cash Chats. Cheers.